We are live streamed yet again on a Sunday evening. It's your podcasters. It's Bags with Nick JFDI and Jipaiza, our main bulled up homie. But this is the bulled up podcast. It sounds like Nick missed last week. We held it down, and we even had a cookie monster in there in between. But yeah, I think this is the bulled up podcast. TA report. Go ahead.
I'm not gonna say bulled up. I think it's playing out as kind of anticipated, right? And I think what makes me bulled up, I'm actually just bulled up on my abilities, right? Just to kind of see stuff and kind of see the bigger picture. So I'm bulled up on my process, right? I think that's what leaves me quite happy in the fact that, like, there was a point in last year where I'm like, shit, man, I don't know anything.
Do you think the reason that is just so to your point, like, I largely think that a lot of us were very on point and kind of correct with like the direction in which we were moving. I think the way in which it played out, both in like kind of our perception of time and I guess, et cetera, is kind of where I think a lot of people, myself included, were extremely frustrated. I don't know if you felt that way too or not.
Yeah, I think that's like when we first started this podcast back in January, we talked about how Netflix is going to decide the direction of the markets, right? And shit, it 100% decided the direction. And then we kind of finally bottomed in, like, I say March, April, May, June timeframe, right? Like we were doing okay, and then the China shutdown news happened again, and we just kind of sold off straight. But and there's been a lot of damage underneath. But I think that's what I didn't start buying till like end of April, May. And I've just been waiting. So yeah. I think that's part of it. And like I'm just like, every time I feel like it's gonna go, it goes the other way. So I'm okay. I think what I'm happy with is I didn't buy the top, right? I waited patiently, and I'm still hurting, don't get me wrong. There's still positions that I'm down on, but I'm much happier with where I am on them.
Yeah.
I would have been buying, Tesla at like 300 or whatever, right? So I think that's what I'm like. I think what came to me is I was having a conversation with my dad, I think back in I think it was September or July of 2021, and he had some like annuities that were maturing, and he's like, what do I do with these? Should I put them in the market? I was like, no, don't, right? And I'll tell you when to start, buying into the market, right? And it was right around that April timeframe. So it's just like, it's more so just about the process, right? Like, and from here, for a guy who's retired, he doesn't have a massive drawdown, right? And he's holding stocks that can be long for a long term if he wants to be.
Do you hear a lot of people?
If he has to take the loss, it's a 10 or 20% loss at the most, versus being down 60-70%.
Do you hear a lot of people still kind of spouting off, thinking that it's going to be like? I keep hearing guys say like, oh, the next 10 years are going to be so this or so that.
Well, I brought up the theory of the lost decade, right? Like, that we could just go sideways at best.
So, okay, let's just hypothetically say we do go sideways, right? What range do you think, like, going sideways to me would mean that we're going to rally to highs from here and basically hold like a 350 to basically a 450, 460 range. Like that, I'm SPY.
Yeah.
So like, is that what? Because if that's the case, like I could give two shits if we go sideways. Every one of those rallies is going to be tradable.
Yeah, that's what we talked about when we had that conversation, right? Like there's opportunities, even though the market goes sideways.
Right.
It's not buying the tops of that going sideways, right? You want to try to catch those dips, and whether it comes down to SPY, I don't know, 300 or 280 and goes up to 450, right? Like that would still be a sideways market. There would just be some ebbs and flows.
Sure.
I think the sideways is going to be maybe potentially the indices, right? In terms of what's going on. I think it's still an individual name story that are going to outperform. But like, I think you have to look at your portfolio holdings. If you're holding all your stuff from 2021, 2020 and prior, and be like, listen, is this the stuff that's going to come back, right? Like, let's say, for example, let's take Fubo, right? I know it gets picked on quite often, but let's take Fubo, for example. And you were buying, I don't know, in the 7s and 8s, and watched it go up to 60 and you were happy, and it's now back down. Jesus, it's sub $1 now. Jesus.
112.
Oh crap. I didn't even realize. I didn't pay attention to it, right? So question is, does this ever get back to all-time highs? And to me, or even close to it, right? Like you might get a double, you might get a triple from here, which is $1 to $3 or $5 or whatever. But
I'm just going to go out there and say 40s would be a bit of a stretch.
Yeah, and that's the assessment that I think if you've been kind of asleep for the last 2.5, 3 years, this is the assessment you need to do, is like, does this make sense for whatever market coming into? It's not going to be a free money market as long as it's been. We might have rate cuts to save the economy and all that other stuff, but is this the stuff that's going to come back? And to me, the answer is no, right? Like it doesn't come back. So while you may have a sideways market, this stuff will continue to drain out. These are money losing companies, and they might be good or whatever, but ultimately it's where it's a big time to kind of readjust your assets, right? And you have people harping into, long-term treasuries here for 5%, and I think that's the wrong move personally. But this is where you need to evaluate. It's like what's gonna continue to do well over time. And you can see, right, like the most extreme example in this scenario is in NVDA. And NVIDIA went all the way down to 110, full damn reset.
I've heard of that stock.
Yeah. And it's been monster since then, right? Like this is not a bear market rally.
No, the trend. That's I guess that's kind of where I was going to ask you earlier. Like the difference between now and like, I guess, sure, like I think where the frustration came in last year was just, it was almost like fighting the trend. The trend feels like it has changed.
But this trend already changed back in October when it failed the breakdown and it reversed, right? Like it's been trending higher for 6 months, 7 months now.
Yeah.
And this is my point, right? So you gotta, this is like the good time to take a look at your assets and figure out what's the right path for you, where things go. And I think this is what's important, right? And if you were stuck in your macro thesis, you just missed out on 142% move or whatever crazy ass move it is. And fine, it's overextended, it can pull in all this stuff. But the bigger thing is it just had 142% move, right? Like you might get the 20% move down and awesome, you're fantastic, you've nailed the top for the short term. And so this is my view is like, I think people are still conditioned, and I think people are still stuck in their macro thematic views that the price action is saying, we hear your macro thesis, and so far we're going to say bullshit.
Just go look at Twitter. I mean, just go read Twitter right now.
Yeah.
I don't follow a lot of people, but I get a lot of people who have similar interests, which would be stocks and equities and crypto. And I was just strolling through the stream last night, and maybe 10%, I'm being generous, had anything other than a bearish thesis.
Yeah.
Every single post was like, it's over, like
what the fuck, honestly.
Yeah, everything. And then you look at the index's put call ratio, put call spread. Like, there are more puts out. Like, it is like an 80 right now on that. And it's just crazy to me. This is kind of what we were talking about with Cookie on Friday, right? Like, you have all these moving averages crossing over to the upside. You have resistance flipping to support now. I mean, I'm looking at the SMH on the screen currently. I mean, that doesn't mean you can't revert down and reverse. Like, that doesn't mean that can't happen at all. But right now, just to pull that thesis out of your ass, because all this macro news and banks, I don't know. It just seems overdone to me right now. And I think, the market can climb the wall of worry as long as it's there.
Yeah, I think people that began their trading career, investing or whatever you want to call it, in 2020 are going to struggle, because 2020 really conditioned a lot of people into thinking that like everything moves in the same direction and it's going to make massive moves, when, again, to GP's point, like this is going to become a very stock, and already is a very the stock pickers market, along with having a technical analysis skills, or being able to look at a chart and disregard exactly what you're talking about, reading social media and the news and the doom and gloom out there. So yeah, I'm should be interesting.
Yeah.
And I think that's what, to me, everything I read this weekend was, this is on a healthy market because it's Apple and Microsoft and Meta and NVDA, and that's it, and nothing else is participating. None of those none of those people sat there and be like, oh, this is unhealthy because Apple just dropped 20% in 2 days, right? No one talked about how NVIDIA got sold nonstop for months on end. No one talked about how Tesla went from 300 or 280 to 101 in like 6 weeks. Right. And now you're saying, so wasn't that unhealthy? Like, so the part of the cherry picking part is the part that gets to me, because we had Apple and Microsoft and the ones that we've been talking about recently lead us for a decade. And now all of a sudden it's freaking unhealthy. And to me, I pulled out the chart, I called it, and I'm like, no, they're playing catch up to their counterparts. Their high growth names have already had their initial moves out of the lows. You're talking about 100% moves on Meta, NVIDIA, and stuff like that, right? And you can talk about Netflix and Roku, and the list can go on. Even freaking Redfin has had over 100% move from the bottom.
Yeah.
Right. And so, right. And these all, dude, look at the volume that came in there, right? Even double bottomed and it's now flagging for higher, right? Like this is basic technical analysis. This is not even
high 184.
Exactly.
Right? 184%. So you had these big.
What a Christmas present.
But these were the big flyers in 2020, right? 2020, 2021.
Right.
And they're all showing that they bottomed a while ago and now they're starting their moves out, right? And after they have had their 100 and something % move, basically destroying all the late shorts that came on the picture, it's now consolidated very positively for 6 or 7 weeks, right? and on lower volume on each one of the consolidation bars down, and a little bit higher volume on the ones that are green, right? You can see that it's pretty freaking simple to see, right? To me, and then now Apple, which just bottomed in January of 2023, is moving up. This is a catch-up trade to me for the mega caps, while the high growth names have consolidated,
Yeah.
right? And so what I'm seeing, and what I'm seeing across the board, is all the names that I've been talking about for the 6 to 8 months now that are on the verge of distribution, or we're in the process of distributing. And we talked about this many times, which is, momentum wanes and then it collapses. That's what distribution is, right? And you're starting to see XLE get weaker, XLU, XLP, XLV, right? All the names that are kind of were the safety names, or the ones that got bulled up in 2022, are all in their distribution cycles and coming down. And now what you're seeing is the rotation back to tech that was happening all of last year while they were distributing out these names. And now you're seeing rotation within the high beta and beta names within tech, right? Between high growth and large cap. And so that's what I'm seeing here. And until that changes, until we see a full scale, like they sell Apple along with Fubo and everything else out there, Fubo, sorry, everything else out there, this is probably the most constructive kind of moment where you can get in and not have a huge loss to the downside. You can keep some pretty crazy stops, because we've been sideways for 8 months now, 9 months. That the risk to me is not being long in this market. And maybe I'm wrong, and that's fine, but at least the risk is only like a 10-15% move down versus a 60-70% move down.
And look at the Qs RSI. Like it's freaking 57. Like it's not even on the weekly, it's not even like it's up into the 70s yet. So I think I'm with you, GP. I've been the waited out guy for months now. And if you can't get constructive on big tech as your market leaders, and the Qs at above, swift flipping support or resistance into support, like I don't know how to convince you otherwise, right? Like I can't, and I'm not trying to convince anyone. I'm just telling you what my thesis is. Like, doesn't mean things can't fail, but again, that stop now, it's pretty clear, as opposed to not knowing which way the market wants to pick. I mean, it's to me, it's pretty laughable that all of a sudden we're still seeing these tech wreck and 07, 08 waterfalls from here. Again, it's who knows? I don't know what's going on through those people's mind, other than it's fear mongering to some degree.
I think
they're short. They're in their short positions, hoping they pan out.
Yeah, they're talking their books ultimately, but I think most people honestly just want to be like, listen, I called the top of the market, and I called the 60. Who gives a shit, honestly, right? Like, if it gets there, get the catalyst. But U.S. Treasuries aren't your catalyst. I'll say it again and again. That's my thesis, and I'm sticking to it until I see something that's fundamentally wrong with, like if you're doing a 2007, 2008 comparison to unable to value paper versus paper that can be valued just discounted, I don't see the same correlation. Maybe it turns into something else and we do see a catalyst that makes sense to me. But as of now, as we talked about on the Cookie podcast, nope. I don't like, this is just fear mongering.
I really like the way Cookie put it too. Why are we looking back, a decade and more for analogs? Why don't you look, the past year, the past month, right? Like those would seem to be more relevant than something that happened so long ago when it's a completely different environment.
And something that one of my mentor taught me a long time ago and was you need the price action is telling you so far that your macro thesis is wrong, right? And price usually leads news. So whatever you like, take a look at KRE. Right, pull up KRE from your bags.
I'm on it.
That weekly was green.
Last week
Yeah,
by a hair.
but dude, you're talking about the worst crisis since 2008, and you pulled in a green week.
Yeah, true that.
Where was the continuation? Where was the move down that should have been absolutely destroying? Another bank failed. They're talking about Deutsche Bank dying, all this stuff, all this fear mongering, and you had a close that was higher than last week. XLF.
Yeah, I just
Held the
typed in
2008 highs yet again. It almost didn't until like the last minute of the day. But
The last 5-minute candle was a nice save on everything Friday.
But my whole point, right? This is a 13-year consolidation, 14-year consolidation on the banks, and you have one of the worst crises in the world. You would have expected this to burn right through it. When you have a crisis, pull up SIVB. This is what happens in a crisis. This is what happens in a crisis.
It does not stop.
You sell first, you ask questions later, and you break through all and every pivot on the chart, right? Like it literally
happened to all the people who had bought puts and are like wailing the
past expiration, and they haven't unhalted the stock. It's game over.
So they go unpaid.
Yeah, they expired
Really?
worthless.
Wow. Well, that sucks for them. They got the call right and they can't get out.
Yeah, well, that's why shorting is hard.
Womp womp womp.
I mean, this is what I'm talking. This is what I see, right? And there's so many people who see, and so that's why I was talking about our cookie podcast, right? Nick, we was like, what am I missing? Because there's so many people that I respect that are insanely bearish, and I'm like, what am I missing? Am I missing something? And I'm like, nope. You got your process. You trust it. Let them be whoever they want to be.
Yeah,
First Republic for $12, formerly a $200 stock.
But this is what happens when you actually have panic and chaos, right? If there's a crisis, this is what happens. You don't get any pivots or stops. You literally just die.
I'm just going to buy some First Republic and just hold on to it. That juicy 8.7% yield.
Pack W is still better, in my opinion, because buyers are coming in.
Do you think that?
Look at that volume.
God,
Look at that volume.
I did not see that. So that October low, God, it makes it look so similar to the 08 bottom. Pulling it back.
On the Qs or the SPY?
I'm on the SPY. Except did we have an engulfing week? Let me look. No, not quite.
And so that while you're looking at that, Nick, that was the other thing, right? Qs had a massive engulfing the week before and then followed through, and everyone was shocked.
Well, bears keep saying you're right here, Nick, as opposed to where
bears are saying what? We're right where?
Right here.
Yeah, no way.
Or just right below that, right? Somewhere there before before the world dies.
Yeah.
I think we're closer to kind of like that May 09.
Yeah, and to
like
me,
in that kind of period of like
when we hit that bottom in May of 2008, 2009, or whatever that time frame was, people were out of jobs like crazy, right? People were really afraid of being able to actually eat and pay their mortgages. And you're telling me it's the same? Okay, possibly.
And the Q's bottom, the Q's 08, 09 bottom is much prettier than the
yeah, well,
the SPYs. Damn.
Spies have too much, right? Qs are pretty concentrated.
Yeah, I
if you look at the 2000, 2001, I think you're kind of there. Well, I don't think I should say I do not think that. If you look at some of these stuff people post, that's basically what they think, but that doesn't look anything like what's happened right now.
Do you remember when NVIDIA and Cisco were the same chart, just 20 years apart?
Yeah.
God, the Qs look identical to where the spies are right now. I'm sorry, the Qs bottom in 2002. What is that? 02. Yeah, that looks almost identical to the spies now. You get that spike low and it holds, and then you get a hard rally and we move sideways.
Yep.
As long as you can move sideways and put in that higher low, we're good.
But we were grinding higher for years, right? After that, right? It wasn't like we're not going back to this V shape. That's my personal.
No, yeah, right.
Opinion.
I'm with you.
But the grind, as of now, seems higher to me. But I don't know.
I mean, whether we grind or rip, like we're still going in the direction we want to go. Like we got to trade the market that we have.
Amen, brother.
Not the one we want. Which that was my main lesson last year, I believe.
Yes, and we can also talk about Netflix.
Netflix.
How many people were writing off Netflix on Wednesday?
I mean, you were writing off Netflix last week.
Yeah.
I said it was acting like garbage. Right? So, and it was. And Wednesday was that kind of final swish down. And
held that Weinstein 30 period on the weekly.
But it leads and never follows. And if you saw on Wednesday, it was the first out of the gate, right? Like it gapped up. It said, screw your 292. We're not going to even let you participate down there and get out of your puts. It closed at 294 and then opened at.
It's going to 330.
It already hit 330.
I know.
What's your why is it won't let me? What is your favorite? What are your favorites out there right now?
Oh, we're jumping to this segment.
All right then.
Well, I mean, I was just kind of going off of the Netflix convo or the next.
So one of my favorites is Baba. It trades like crap, so I'm not giving any thought process in terms of when. I just know it's going higher. So
I think Friday looks better.
Agreed, but Baba plays the catch up, right? And
sure.
Yeah. Baidu also treats all the China stocks, they trade like crap. So the other one I like is
in a minute. JD's really got some catching up to do.
Yep. Also like Tesla.
Yeah, okay. Tesla's my probably favorite out there.
I still see people calling for $25 on Tesla, and I'm like, you should never be allowed to work on Wall Street again, right? Like,
or
for
even
the fact that you exist, you should just never be allowed to touch anyone else's money, including your own.
I think you could faff around for another couple weeks.
$25?
What?
Someone thinks out there. That
No. I said I think it could faff around for a couple weeks before it makes a move higher. Like it can tread water through here through like the just under around 200 before it jumps.
Just set your alert at 219.
200 day. Wait for that to clear and it's game.
Yeah, exactly.
Yeah.
I also like Amazon.
I was going to mention Amazon. I really like Amazon right here.
I really like how they're just pissing people off.
So
On
we
the
were
chart.
we were talking about the catch up, right? Like Amazon should follow its big tech brethren, and while it has made a couple moves, the earnings move and this move 2 weeks ago, it is not where Apple is. It is not where Google is. It is not where Microsoft is, right? So I think Amazon is ready to play catch up, and I wouldn't be surprised to see a 110 boner bar coming. I'm not saying that happens this week, but I think it's going to go up there with the quickness.
Do you remember the arbitrage plays that we were getting all the way till Jan Alpex and they just disappeared magically after that?
Well, it's a 200 day, so there you go.
All those massive put spreads that were being bought and sold in the same day and never change any OI, the arbitrage, that caused the put call ratios to spike and all of that stuff. Amazon, until I think March Alpex, was the only one who was still getting massive arbitrage plays week in and week out. It was kind of nuts to see. So I like the fact that it was also weird to see Meta cut thousands and thousands of jobs, and it responded positively, and Amazon cuts jobs by the thousands, and Amazon goes down.
I mean, look at this pig, right? Like Meta has just exploded too, from the low to the high. That's 136% since November.
Yeah.
So yeah, that's a lot to like about Amazon, in my opinion.
I also like the small caps.
The small caps,
Yeah.
Like the IWM.
Yeah, I mean, I think the small caps are going to get pretty explosive here. Personally, it's holding that kind of breakaway gap on the small caps. Or right there, it's been testing and testing and testing.
Mhm.
And it's not like, look at the volume that came in, right? To destroy IWM, and it's still just
And that was the banks.
Yeah, doesn't matter what, right?
Yeah. A lot of
And
people don't realize that there's a lot of banks in the IWM, and it's banks.
Yeah, and it held that trend line. That you got the same trend line as I do. I like this for, like, it almost looks like a spring setup to me, right? Like maybe it goes a little bit lower, but it's on the first load down from 244 straight to 163. It filled the gap, the breakaway gap, went higher, came back to retest the breakaway gap, and now we're putting in kind of like a bottoming pattern here on volume, right?
Yeah,
like,
I would be surprised if this saw under 170 for a significant amount of time.
Yep. So I like this. I like this for 6 months out. I don't know if it's going to be in the next month or so, but
Right.
I really like where this can go 6 months out.
Yeah, I'm with you on that. I'm with you on that.
I also like the gold short. I think that's probably not that popular for a lot of people right now.
Gold bugs are going to be about it. You got them all mad last week, GP.
I know. I don't think people like me much, but that's okay.
Nick, you were talking about the miners right before we jumped on.
Yeah.
I like the miners better than gold itself, which goes into the oil services that we'd previously talked about.
Yeah, NEM don't think looks all the greatest, but FNV and RGLD were the two that I was kind of eyeing.
Well, I mean, you can look at GDX, right, or GDXJ.
Oh yeah, totally.
J.
I didn't even look at those. Hold on.
The juniors or the seniors. Somebody asked for charts for charity what I thought about gold and the miners. They like the miners too. And I showed them gold, and I was like, I think it's choose your own adventure, right? If you're going for gold, like, it looks hot. It looks like it's got some negative D here on the RSI. We've hit this range that we've talked about 1,000 times. Why buy it here when you can wait for the breakout? It's not breaking out. But then the GDX, like, looks more constructive, right? Like it looks like it's just starting to move upward. So
Yeah. I don't like either sector. I think gold a bit up with everything that's going on, but I just don't. If you're talking about the worst crisis ever to ever hit outside of 2008 and the depression, then you would have expected gold to lead, right? Like it just breaks out, and as of now, it 2 times it tried to break higher, and both times it got rejected back-to-back weeks on GLD and futures, right? So I just don't see how this. I think it breaks down in part of a larger bullish setup. I think you're just early to the game, and Nick, we've talked about this so many times, right?
Yeah.
It's like just wait for all-time highs and participate in the meat of the move.
Right. Damn it.
Like, so you won't get the exact bottom. Who cares? It's so frustrating.
You were talking, Nick. What name you got? We gave a few things that we like. What do you like?
Tesla's my favorite.
Which one?
Tesla. Auto Nation was on there. AN. It's kind of not falling off my radar, but I don't like that it's back within its range. It is about the 200 days, so like if that's you're kind of bottom picking like your kind of style, this wouldn't be a bad spot. At least looking at the daily, you have kind of a double bottom there on the 200 day. But Tesla's definitely my favorite. I like Roblox. I like the range that it's kind of in, and where it's sitting right there.
Roblox is buy on any dip to like the 30s and just wait a few years, 5 years. I think you'll be happy. Personally, that's how I'm in it. I'm not trading it much.
Same.
But you know what's also really nice? ARC.
Yeah, I love my Kathy.
So this had a big move from the bottom, right? It went from what was it, 29 and change, or 29.43 up to 45. Which is a pretty big move for an ETF. The retracement's right at the, I think, 61, and it's been consolidating and flagging. As you can see, the weeks that it's green, it's pretty large volume, and the weeks that are red, it's pretty light volume comparatively. I like this consolidation that's happening here, that if Tesla starts to break out, guess what's coming with it?
Yeah, ARC.
Yeah.
Still her number one holding.
Yep. And she bought like crazy on Square, which I think was way overdone. I still find it hilarious.
I agree.
I find it hilarious that Square had a worse couple of days than Coin did, and Coin got a Wells notice.
So I haven't looked at Kathy in a minute.
I haven't either. I have for charts.
Top 10 holdings in ARKK: Tesla, Zoom, Roku, Coinbase, Exact Sciences, UiPath, Shopify, Square, Teladoc, DraftKings.
Shop looks ready to go.
Roblox and Twilio round out those top 12. I mentioned Roblox and Twilio.
Shop, pull up Shop. Shop looks pretty good.
DraftKings. So. Yeah, it does.
The EXAS looks ripe as well. At least on the weekly, is kind of what I'm looking at. Just
that's a
nice tight flag. Yeah.
Oh, that's volume. Oh, that's nice. I like that. I don't even look at bio. Oh, okay.
Zoom.
Zoom's just whatever. I don't know.
Yeah.
We need another shutdown for Zoom to take off.
You still in Roku, GP?
Me? Yeah. Yes. I am. I still like it. I still
gotta holla.
I still like it. But I'm not talking about 1 week out, right? So
Right. Yeah.
Yeah.
I mean, to full circle what you were saying earlier, GP, I took the opportunity to make some moves over the past sessions, few weeks, and kind of retransform my portfolio a little bit. Not that I don't think that Twilio can't keep going, or Salesforce, which y'all know I love very much, can't keep going. But I made a big bet on the TQQQ, just because I think we still have that upside to go. I mean, obviously, most of you guys should know that the TQs track the Qs, QQQ. So yeah, I'm kind of bulled up right now. We'll see how that plays out, but got some dividend stuff, got Dell still. But I want to thank Mr. Market for giving us the opportunity to reconfigure and rebalance and do some things that, I think you said it pretty well, GP, with you got to take your opportunities, right? And it's a good opportunity to make sure your thesis is working, and it has been. So let's shuffle around some cards.
Yeah, and whatever that falls under, I think for me, perma anything is always a weird place to be.
Mm-hmm.
And
I mean, if anything, you ought to be a perma bull.
yeah, but like
I'm just saying over long term, like.
Yeah, for the long term, the market's going higher, right? Like,
Yeah.
I mean, if you're thinking years and years out, the market's going higher.
But so I think what for me, right, and this is just for me, is like when I think you got to take a step back and evaluate some conversation, right? Like in 2021, my conversation with many people was, aren't we at peak tech growth, right? Like, how can you ever get this set of scenarios ever again? COVID, insane QE, crazy demand. Like, how are you ever going to get that again, right? And if you were buying into the markets then, like, it was fine to trade around. I'm not talking about that, but if you're buying for long term, like, what were you thinking, right? Like, that's what you need to kind of evaluate and sit back and be like, oh, is this just going to go on forever? It's like, probably not, right? Logical stuff, right? I think that's the stuff that I take a look back and reflect on what I was thinking, and I'm like, I think that's important in this conversation too. And markets moving sideways, it's a good time to have that analysis on your own thoughts and views and what you want from all this. I think it's really important there. And stop worrying about week to week moves, right? I think that's if the last 8 to 10 months hasn't given you ample enough reason to stop worrying about what this move is and what that move is, and I think you're gonna lose your hair, you're gonna die of a heart attack, you're gonna go through a lot of pain. Focus on what the big trends are, like, right? Money's coming out of stuff, it's rotating into other stuff.
Yeah, I've been spending very little time at my desk. Kind of for that reason.
Yeah. And I think I said at the beginning of the year on StockTwits is like the next 5 to 10 years is probably going to be a better time to invest in yourself and in the markets, right? And that's personally what I think. And it's always good to invest in yourself, but the next hype train is what you got to find, right? What's going to be the next? In 2000, we had no clue what Amazon and Microsoft were going to be. So it's 2023. What are things going to be in 2033, right? And that's what you got to kind of look for here. And building businesses or investing in yourself in a business that you can see a future in. Maybe it's AI, maybe it's something that you're not even expecting and it comes out of left field or whatever it is.
Yeah,
the
totally.
mainstreamification of the TA Rapport podcast.
Yeah. Right. Like, I think it's important to do a self-evaluation in general. But in moments where the market's giving you abilities to kind of think about where we are in the next 5 to 10 years is a really important time to do.
Yeah. I mean, I'd largely argue that both crypto and the metaverse are
Made up.
both made up and what you're looking for in 2033.
Correct. I think what comes out of this new technology, this crypto, this AI,
Yeah.
is not going to be anything you can really imagine, right? At this moment.
We don't know.
But you want to know that you want to be in the crypto space, you want to be in the AI space, and build skills around that, right?
I mean, you could probably just realistically get away with Google, Tesla, maybe coin, some Ethereum, Bitcoin, probably leave it at that, really.
Yeah.
Yeah, I don't think you have to have a portfolio of like 15, 20, 50 things,
No.
right? Like if that's the case, just freaking buy the indexes.
Yep.
Bitcoin put in a weekly doji.
Yeah, I didn't like that.
Yeah, I
To be
didn't
honest.
either.
I don't know why. It's just that.
Coming off the monthly doji, which the month ends obviously this week. This week's weekly doji is a bit of a curious candlestick pattern there. We'll see.
Do you think that 29 to 30K would be a pretty big level to reclaim in Bitcoin?
Yeah, I think if this level holds, we're probably going to see 33 to 36 pretty quick.
Yeah.
But it's crypto, right? Like it's very volatile. It can go a lot of different ways. Right now it's holding. Like it's done what it had to do. I mean, it barely closed negative for the week. Really, I'm still concentrated on this monthly, Nick, just to be
Sure.
super transparent. And above the monthly 21 is like 27.6. So anything above that, coming off that monthly doji, it's really hard for me to be like Bitcoin's retesting new lows anytime soon.
Yeah,
because that's a tremendous bullish move to go from all the way under that. I don't do Ichimoku, but it's in the cloud right now from some of the people I follow on Twitter. It hasn't been in the cloud in a long time. So, in the cloud's not above the cloud or through the cloud, but it's been below the cloud for a while. So if anybody keeps up with Ichimoku, it could be a bullish sign.
Okay. I'm pulling up the Ichimoku right now. Yeah. Yeah, but it's the flat top red cloud. It usually doesn't move through this. It's gonna.
I need more indicators.
So I've been talking about this for a while too, for like good trend following is like when if you are watching the Ichimoku cloud, the weekly red top flat is really hard to bust through. Like it has to be like extremely awesome news and to get it.
Yeah, I'm not saying we're going through 40 anytime soon.
Yeah, but as soon as that cloud starts to come down, that's when it starts to really move, right? That's when
there's a big base there between, right? Like normally you see the cloud thin out before you get but this is what it did back in 2019, right? It moved through a similar, not a flat top cloud, but it moved through a pretty wide cloud there. I don't really do a lot of Ichimoku. Some people swear by it, but
I think it's
this
great
is the first time we've been in the
visualization
cloud
tool.
since
Like if you pull up NVDA in the same cloud right here? You see how it was a flat top cloud for a while and then it started to come down, and that's when it finally broke out, right?
Yeah.
It's a good visualization tool. I don't use it to like trade or anything against, but when it does get through those weekly red clouds, it becomes really powerful.
So there you go. Maybe May.
Yep.
Summertime.
And that's part of like, if you look at Netflix, that's why I've been like, I'm anticipating like a May, June breakout for Netflix. And it's been range trading, right? That massive flat top cloud is just stopping it from going anywhere. So it's been consolidating in the cloud, which is great, which is always a good positive sign. And you're looking at the real move after that flat top cloud ends.
What do you think of the drugs? Not to totally switch.
Oh.
Ah, they're pieces of shit.
Yeah.
It's a gush for him. This is the opposite of what you want XBI to do in a cloud. Fail it.
Yeah, the XPI definitely did not like the look of that one.
I still don't think it's that bad. IBB is actually better. It held the
Yeah.
cloud,
Yeah.
which makes sense, right? Because mega caps are a bit stronger right now.
I think it's shake and bake, baby.
Yeah, that VRTX is looking good.
I went from full piece of shit mode on XVI to it's going higher, baby. We're doing the shake and bake.
I think Cookie helped with that, right?
No, not really. I still think it's a piece of shit.
It is. It trades like garbage.
I'm talking my book right now.
You know what looks really good from a commodity perspective is Dr. Copper. HG.
Copper. HE?
HG.
HG. Copper futures.
Yeah, it does look good.
GP's been on the copper bandwagon for a minute now.
Yeah, but this is our economy, right? Like this has been the leading indicator in our markets for a really long time, and it bifurcated back in 2020. But you have something that bottomed. It had the distribution cycle at the top, and now it's been consolidating and going higher step up by step.
Mm-hmm.
And everything we use and do includes copper. So that's why it's a great indication of what the economy is doing. And so, and then you look at LQD, investment grade corporate bonds.
Oh my gosh, I have access to yearly bar charts on. That's amazing. I didn't know that.
I thought you were gonna give me some awesome chart. You're like, I got yearly charts.
No, sorry. I'm putzing with copper, and I was like messing with like the time frame, and then I was like, holy shit, I can go like 3 months, 6 months, and 12 months. So anyways, back to your copper. Like, look at the yearly chart. Like, it looks. I don't know. I think it looks great.
Yeah. So like, there's so many things that tell me that whatever crisis contagion fears that you have so far are not being reflected, and you could potentially be wrong. And so that there's more evidence, and it continues to build. Meanwhile, nat gas is taking a big old shit.
Oh my gosh, that's pain right there.
Yep. Give me my 185, and I
Nice.
am adding, and I'm adding.
That is
The double
pain.
bottom at 185. Whew.
Holy cow. I mean, this was a nice little trade right here.
Oh yeah, it was definitely due for a mean reversion, but
How's my gush doing, Nick?
didn't they decommission it?
You know what we haven't
Oh,
talked about
man.
at all, right? Is the energies in the oil. So I got to bring up some gush.
I mean, I'm on these yearly charts now. Damn. I think XL, sorry, I'm looking at a yearly chart. I think XLE looks good. Maybe I should go back to like a weekly look.
Monthly doesn't look so great, Nick.
Yeah, I'm not even yeah. I'll pass.
I'm just saying.
What were the names that I liked?
Hmm.
Yeah, like Hess, for instance, broke not this last week, the week prior. It broke kind of a long-standing trend line that began at the 2020 lows. It's under all its major moving averages. That looks like garbage. I need MAs to be stacked already for me to enter. So
I don't see it, Nick.
what's that?
I don't see the goodness that you're speaking of.
No, I'm saying I don't.
Okay, all right.
I'm in agreement. Like I was using Hess as an example of
look at the
breaking
XLK.
a major.
Like it's tech, baby. It's tech. Look at the XLK. It's tech. That monthly. Look at that monthly.
And now compare the XLU. Now compare the XLU.
Oh shit! I have monthly charts. When did they give me this?
Looks like doggy doo doo.
Yeah. So I think to me it's probably the most clear indication of distribution. The 2020 trend line in XLU broke, recovered, broke again, got rejected. It's now coming. It's just.
I mean, even home builders look better.
Dude, look at Redfin.
Well, they're not a home builder.
I know, but that's an indication.
Yeah. No, I'm not disagreeing with you. I'm just saying they're not a home build. Like home building is home building would be more akin to Dr. Copper.
Correct. Yeah.
I haven't looked at the transports. If you love Dow theory, you love the transports. That doesn't look great.
AAPL. No, that failed. But it fell in a trend line, right? Like in a reversal pattern.
Bad. IYT.
Yep.
Yeah, it's basically the same.
I think in some of these, not saying the IYT specifically, but like it almost kind of feels like even the ETFs could even very well be range bound and not so much as the best place to be if we're talking about individual names. Like, I mean, just like, like use solars for example, like TAN looks like not the greatest, but if you're involved in like FSLR or I guess, I don't know what the other ones are, ENPH. I don't know what the other ones are.
FSLR. Holy Jiminy Christmas.
I guess I kind of like SUDG and ARRY more than ENPH, but I don't know.
I said G's going nowhere fast. I think FSLR has the lowest debt, which is why it's been outperforming for everyone. It's just been monster, right?
It's starting to create some negative divergence too.
Yeah, it's had a 242% move or something.
Yeah,
like
since June.
Yeah, so like it's.
Yeah, I know. I'm not knocking this one. I'm just like it has run like a scalded dog.
And it still looks like it's going to go higher to me, right? If I'm looking at the daily, it looks like it's rounding up.
Dixie continues to fail.
No shit. Only if you were told.
Yeah, no kidding, right? Like we've been on that bandwagon for a minute. All right, fellas. Thanks to everybody who watched tonight.
Do we have any questions?
No, well, Randir was here and he wanted to know we discussed Netflix a little bit. I don't know if you have anything to add to Netflix, other than it's going higher?
If it doesn't go higher,
If it doesn't go higher, it goes lower.
then the market's coming with it, right? Like my thesis has not changed for many years, which is it leads, it does not follow.
Nick, any parting shots? Any last words?
Tesla's at my number one. It's my kind of focus.
Tesla is number one.
Yeah. I mean, from a trader's perspective, to the upside or downside, I think where we're sitting right now is basically at a retest of the neckline from its head and shoulders. Hypothetically, like let's say we fail here and take out that basically that 100, 102, whatever pivot low. I have a measured move down to 70, like 70s, and that would kind of coincide with, I think, Duzio's 69er level there. But we go higher, take out that 220 level. I have a measured move at like 360. So in either direction, either case, Tesla is kind of my focus. I think it trades as clean as almost like even the crypto stuff was when everything crypto was kind of moving. But
yeah, the only problem with Tesla is if you're doing options, the premiums are through the roof at all times. Like it's just if you're going to trade it, you're going to find out the hard way that the capital requirements are pretty large for, unless you're buying like way out of the money, and then you need Tesla to have a 30% week or some nonsense.
I don't like Boeing, and I still don't like the XLI. So that's what I'm saying. I don't like. What I do like is Amazon. So there you go. There's the week ahead, and probably a few weeks ahead for me and what I'm thinking. But thanks to everyone for joining. Thanks to the guys. Nick, thanks for being back. I didn't expect you tonight, but it was a nice surprise to have you.
yeah,
We will miss you again next week.
And I'm back.
But you'll be right back. And
Yeah.
we appreciate that you're not gone too long. But everybody needs some time with family and some chance to recharge. So we hope you're back at it, and we're eager to have our third compadre back.
You got it, brothers.
Enjoy your time off.
And with that, we bid you a good night. Thanks for listening. Thanks for watching.